Well, hello everybody. Welcome back. My name is Tony Zavala, and this is the second in the series for buying real estate for profit, cash flow, and retirement. Thank you for tuning in. On this module, we're going to talk a little bit about a basic real estate transaction and give a high-level overview of what's going on within this transaction. Now, when we talk about selling real estate, it always starts with a piece of property. And a seller, an owner of that property who wants to sell. Typically, they employ a real estate agent when they're looking to sell a piece of property, mainly so that the real estate agent can assist in that transaction and do the contract work that needs to be done, and also list the property on the MLS, on the multiple listing system, or multiple listing service. It is the real estate agent's responsibility to go through and market that property and make that sale happen, because that is the only time that the real estate agent is going to get paid. So, enter in the buyer. We've got a buyer that calls up a realtor in their area, maybe a friend of theirs, and says, "Hey, we're looking to buy a house. Some certain criteria on the house, certain neighborhood, certain price range, that kind of thing." And typically, the real estate agent is going to go to the MLS, or perhaps drive the neighborhoods that they're looking for, and look for property that's going to be good and acceptable to the buyer. Once they find a piece of property, then the negotiations begin. This is where they negotiate on purchase price versus what they're going to offer, any contingencies or any concessions that are going to be made by the seller in order to make this sale happen. Stuff needs to be fixed in order for the buyer, in order to come in and purchase the property. That kind of stuff would need to be negotiated, or the buyer is waiting for their house to sell before they can purchase this house. That's a consideration or a condition of the sale. Those types of things the real estate agents are going to negotiate and hammer out. Once they get all of those details, they're actually going to put pen to paper and actually put everything together in a purchase and sale agreement or a contract. Everything that deals with that purchase and sale is going to be in that contract. If anything is not in that contract, it does not exist in the transaction. So if you've got a seller and buyer making conditions or making agreements outside the purchase and sale agreement or the contract, that's not valid. Title company is where this comes in, and very, very important role that the title company does. They handle all of the monetary transactions. They handle all of the recording, all of the deed transactions for this sale. And what the real estate agents are going to do, they're going to file that contract with the title company. Now, when the buyer is going to buy the property, typically the buyer has to employ a bank. They have to go and apply for a mortgage. They're going to get a mortgage to get this to buy this property, and the bank is not going to give the money directly to the buyer. That's where the title company comes in, because the bank, when the transaction closes, the bank is going to issue the money directly to the title company. And the title company, their responsibility is to go out and check all of the county records. They check the deed history, make sure that that the seller is who they say they are, that the deed history is correct, and that they can ensure good title and good history chain there. They also check any liens, because what typically happens is that the seller is going to have an existing mortgage on that property also, and the bank needs to know, or the title company needs to know, who that bank is and how much is owed to them, and they find all of that information through the county records. So at closing, the title company is going to take the money from the buyer's bank, and check the county records on all liens and existing mortgages. If there's tax liens, anything else that's owed that is tied to that property, they're going to pay that out at closing, and that's where that money goes. And only then will the remaining portion of the money get put to the seller, or get sent to the seller via a check from the title company. As you can see here, in no time does the buyer and the seller actually ever exchange any kind of money, nor does the bank send any kind of money directly to another bank. Everything is funneled all directly through the title company, which is why the title company is so important. Now, those real estate agents need to get paid also, and typically the seller is the one that's going to pay those real estate agents, and usually do that from the proceeds of the sale. In this game, real estate agents usually charge about a 6% commission for their for the purposes of selling. That 6% is usually divided 3% between the buyer's agent and 3% between the seller's agent. They split that commission. Now, these agents, these real estate agents, they work for real estate brokers, and usually the brokers have an agreement with the agents where they have a commission split. So a lot of the times the agents have to split even that commission that they get, that 3%, sometimes up to 50-50 with their broker. So they've got a 50-50% commission split on that commission, and that 3% is now down to 1.5% of that sale for all of the work that the real estate agent does. So you can see here that real estate agents really have to hustle and get out there and get the listings and make the transactions happen in order for them to get paid. Quick example, if you had a $100,000 house, the seller is only going to realize about $94,000 because $6,000 of that is going to be paid from the seller's a portion to the agents. Of that $6,000, $3,000 will go to the buyer's agent, and $3,000 will go to the seller's agent, and then depending on what their commission split is, the part of that $3,000 is going to go to their broker. So in that case, that real estate agent's not going to make more than $1,500 or $2,000 for the sale of that property. So you can see how they have to hustle and get all of those listings in order to get paid. The very last thing that happens is the transfer of title. Again, the title company does that by filing the deed records and the mortgage records with the county courthouse. For that particular piece of property, and only then is there a public notice or in the public records that a title has been transferred from the seller to the buyer. And that right there, folks, is a good overview of a basic real estate transaction. Thank you guys for taking the time out to view this presentation. On our next module, I'm going to talk a little bit about buying and holding strategies versus fixing and flipping. It's a very entertaining module. I highly encourage you to continue with the series. Again, my name is Tony Zavala. My email address and phone number are on the lower left-hand side of the presentation. If I can answer any questions that you might have on any of the presentations that I do, feel free to give me a call or shoot me an email, and be glad to answer them as best I can. Thank you very much for your time, and you guys have an excellent day.